This is the end. This is the last time we're going to be able to buy stocks at discounts and sell cash secured puts with super high premiums while there's still fear in the market. This is the last time we're going to be able to do this for a while because I believe the market is headed much higher from here. Fortunately, that's a good thing for our portfolios, but unfortunately, I feel like the market was only down for a couple months and we only got to take advantage for a very small amount of time. But I'm going to go over two specific stocks in the portfolio that I'm actually trimming because I believe they are running and getting too overextended. Then I'm going to go over three stocks that are still at a massive discount that you could either buy, sell cash secured puts on, or even put LEAPS positions on, LEAPS call option positions, and I'm gonna jump into those. But first, let's take a look at the portfolio. As you can see, we're just over 1,016,000. And to show you my realized gain loss in the last 3 months, because some people don't believe that, I actually do what I talk about, right? We could take a look, $119,000 in the past 3 months on this size of account, 90% win ratio. So, and I'm doing basic trades that you guys follow along with, so I appreciate you supporting me here. But there's, I'm not the only one doing it. As you can see here in Options Trading University, my client Chad just closed out a trade today, $5,500. Kevin, $744 there. Mike, $239. Trad, $3,694. Jason, $6,268. And if you want access to my trades under the Ryan's Trades channel and the LEAPS entries and exit, then you could check out the description below to get more information on that. But let's go ahead and dive into it. I'm going to talk about the markets. We're going to talk about exactly what is going on and why the market is pushing much higher from here. Now, Trump did meet with President Xi. He says that China will supply rare earths in a done deal. Okay, so basically they're going to supply magnets, any necessary rare earths, and then the tariffs, it says we're getting a total of 55% tariffs and China is getting 10%. So that's over and done with. That was already priced in, okay? That was already priced into the market. So what's really driving the markets higher here is actually the inflation. So the inflation rate actually came in lower than expected. The core CPI data was released today, 0.1% increase versus the expected 0.2% increase, bringing the core CPI to 2.4%. So inflation is coming down quite a bit. We're at 9% in 2022, okay? So we're getting closer to that the Federal Reserve's target of 2%. And that's really where Jerome Powell wants to see it before he cuts interest rates, which is good for the markets because that means businesses can borrow at cheaper rates, consumers can borrow at cheaper rates, and more people are buying things and more money floods into the stock market. And what we saw today on the CME FedWatch tool, now what this is basically the futures for interest rate cuts probabilities, we saw that this changed. So the interest rate cut for September yesterday was not being priced in. It was being pushed out to October. But what we could see today is that September interest rate cuts are back on the table. And also December interest rate cuts are also back on the table. Those were getting pushed out to next year. And then the fifth rate cut is actually potentially coming next year in December. So we have interest rate cuts coming back as the data is looking better for the Federal Reserve to actually cut interest rates. So what we're looking at now is QQQ, the NASDAQ 100. We could see that, we're just grinding higher. Today we hit a new high, a new monthly high of 536, getting closer to that 540 target that I've been talking about. I think when we do hit that, either we're just gonna blast straight through like nothing happened, or we may see some resistance, which is what I'm expecting. I think we could see some resistance, maybe flood back down to the 530 area before resuming higher. Okay, so that'll be the area where you could, take off some trades, have some cash on the table, ready to go. And with that being said, the VIX is at 17. So fear is still elevated. Fear is still in the market right now, but we're getting closer to that 15 level on the VIX. If you don't know what the VIX is, basically this is what I use to determine how much cash I should have allocated in the markets. And if you take a look at my VIX allocation levels, we could see that we are between 15 and 20, getting closer to 15. So you could technically be 60 to 80% allocated or 20 to 40% in cash. Right now, I'm about 13% in cash. The reason I'm more aggressive is because we are recovering from the fifth fastest stock market crash. So right now I'm definitely more aggressive, but if you want to be safe, these are numbers that potentially, you could implement for yourself so that you have cash in case the market tends to, fall back down, right? And we get a nice little VIX spike. But I don't expect that right now at this rate. We're just kind of heading higher on QQQ. VIX is kind of trending downwards to that 15. And once we get below that 15, I will have a significant amount of cash on the table. And what you're going to be seeing on YouTube is everyone's going to be super bullish, okay? And that's kind of where I'm going to get a little bit more fearful when everyone is greedy. So let's go ahead and dive into the 2 stocks that I'm actually trimming in the portfolio, and that the 3 stocks I'm actually adding to right now. But before we do, if you do want to make 6 figures trading options, there's more information in the description down below. Options Trading University is my mentorship where I help 168 high-level clients that are trading in the markets with me. You could even see some of their client testimonials earning 5 figures a month, 6 figures a month, massive results here at Options Trading University. Also, if you want my free trade ideas, that will be also down below in the description. Here on my Instagram, I give away free trade ideas and my free newsletter, which are both down below in the description. So check those out. Now, let's go ahead and get into it. Now, the first stock that is just kind of getting blown out of proportion here is Palantir, okay? I was very, very excited about Palantir the past few months. You probably heard me talking about Palantir quite a bit, especially when we were down here at these prices, just collecting super fat premiums on the cash secured puts and just riding shares and leaps options up to all-time highs, okay? But now we're getting a little bit overextended here. On the RSI, we're not quite overbought yet, and we could get there. And, PE ratio is at 595. It's not at all-time highs, which was technically back before the crash. We got up to 677 on the PE ratio. And so, really this thing could head up to the 145, 150 area. With that being said, I do want a smaller allocation to Palantir. So what I did safely to still participate in Palantir, but not get assigned up at super high prices or buy the stock way up here, is I sold cash secured puts at this support level. So if we go into the account, basically what I did, okay, was I took all my 113, 115, and 117 cash secured puts, closed them early at 80%, 90% profit of premium. And I went ahead and rolled out to next month to the 125s, okay, to collect another $1,300. So that's what I'm doing here. But as you can see, the overall position size, it was 140K. Now it's 120, and I'll probably reduce this even more as Palantir goes higher. But if you wanted to collect your last bit of premium here on cash secured puts, okay, this is what I would do. I would go out, what I personally did is I went out to July 18th and I went to that 125 put to collect $465. That's a 28 delta, so it has a 28% chance of getting assigned. But, if you did get assigned there, if I do get assigned there, great. I get it at 125. That's previous all-time highs and, below the middle Bollinger Band line. So that would be a great discount on the stock. But let's calculate exactly how much I would collect there. So 465 divided by 125, that's about a 3.72% return in just over 30 days. And if you multiply that by 12 annualized, that's about a 44% return, okay? And that's not even compounding monthly. Compounding monthly, it's closer to 50%. But that's a wonderful return still here on Palantir. You just got to be a little bit more careful as we are making brand new all-time highs, because what can happen on Palantir on any bad news is this thing could definitely retrace like back to the lower Bollinger Band, okay? And the lower Bollinger Band would be at 118. Probably not going to see that, but we've seen it in the past, okay, where this thing is at the upper Bollinger Bands, just, riding this upper Bollinger Band and just boom, just tanking to the bottom. So on any bad news, right? Of course, this is a wonderful opportunity and we'll kind of wait for that, but you don't want to be getting assigned up at the top. So this is why I manage this position and why I'm actually scaling down on my Palantir position a bit. It's just running up a little bit too much for me. Now let's move on to the next stock, which is Robinhood. Robinhood, again, a wonderful company. PE ratio is actually very good, 42. They weren't included into the S&P 500, so that was kind of a bummer. But we are making brand new all-time highs here on Robinhood, and you do have to be careful about chasing this stock upwards, okay? So what I'm waiting for is a nice pullback. Again, like I talked about in the last video, down to 70, potentially somewhere around there to get into leaps for one last entry. and ride it up to new all-time highs. But right now, I'm just staying safe with cash secured put. So what a cash secured put is, basically you're selling a put option and you have to have the collateral to buy it at that strike if the stock goes below. So what I have is the 67s and the 66 options to collect $5,485 for the month of July. So it's a significant income. But if I do get assigned, okay, I'm getting assigned all the way down here at previous all-time highs. So that's kind of where I'm trying to keep my cash secured puts, is around those previous all-time highs, so that in the event we do have some bad news or something happens in the economy that really tanks this market, I could get assigned at a decent discount here, okay? So again, this is a stock that I'm kind of lightening up on, because right now, if I got assigned, the stock would have to fall 10.5%. That's a great discount. And from all-time highs, that's 13, almost 14% discount. So just playing it a little safer on Robinhood. Current position size is 132K. It was at 142. But again, I'm going to be getting this down to like maybe 100, 105K, somewhere in that range, as we continue to grind higher here in the market. So those two stocks, obviously, I'm very excited about. I love them in the portfolio, but I am trimming as we start making new all-time highs. So let's get into stocks that are at actually a discount, okay? And these are the moments where you have to really start thinking about, okay, well, the market is potentially going to new all-time highs. We need to start targeting stocks that have great premiums in the options, so we could still collect 2 to 7% in cash secured puts, okay? But also not be chasing it at all-time highs, okay? So that's kind of what I'm looking at in the portfolio. Where are those stocks and which ones offer the highest return? So the number one stock is going to be Hims. Hims still hasn't passed previous all-time highs here at $72, okay? So this stock is still at a massive discount. It's trading around the middle to, below the middle Bollinger Band, somewhere in that range. I like it there. RSI is not overbought, okay? And PE ratio is still reasonable here at 83. Once we see this thing get up to 100 PE, that's when it gets a little bit too overextended. But right now is a wonderful opportunity to sell cash secured puts on Hims. This can work in a small account if you have like $4,500 to $5,000. This is what I'm doing. But as you can see, right, I'm going to go to Hims, and I actually upped my position. So on Hims, previously I had $99,000 worth of cash secured puts, and now we have about $104,000. So we're upping this position. And for next month alone, I'm collecting $5,255 on this stock. So where do I feel safe getting in on Hims? Let's talk about it. If you go to the options chain, what I personally would do is go to July 18th. You could go ahead and go out to next month, and I would just sell the 20 deltas. So the 21 delta, meaning it has a 21% chance of getting assigned, but a 79% chance of expiring worthless and being able to do this again, redeploy that capital, right? I would sell the 48 strike put for $217. Let's do the math there. So you collect 217 divided by 48. That's going to give you a 4.5% return on your money still. So the premiums are still super rich in Hims, and there's massive amounts of opportunity here because the stock is still, in my eyes, at a discount, okay? And multiply that by 12, that's 54% a year on your money. So that's why I like Hims here. The 48 level is really nice because that falls right below this lower Bollinger Band, okay? And what these Bollinger Bands are, basically it states, the upper and lower Bollinger Band are 2 standard deviations away from the average price, or basically the stock's going to stay within these bands 95% of the time, okay? So, for the stock to go all the way down to 48, right, it would have to crash about 16.5%, which is fine. If I get a sign there, massive discount from all-time highs, that's a 34% discount still. So Hims is looking like a wonderful opportunity to continue loading up on cash secured puts, and I will keep doing that in the portfolio. In fact, I may even scale this position to a 12% of my portfolio, so maybe another 20 grand to really help me out in multiplying my wealth, okay? So really liking Hims, that's gonna be one of my favorites. The next one is SoFi, okay? Now, SoFi just broke above previous resistance at 1480, made new monthly highs today, 1506. but it still has a long ways to go. Okay, it's still from all-time highs here at 1844. It's still, down 18%. So still a big discount. Of course, we just broke above the upper Bollinger Band, so not the optimal entry, getting towards that overbought area on the RSI. But what I think is going to happen is probably this stock may head a little bit higher this week, right? But then it's going to trade in this range, okay? So wonderful opportunity on cash secured put. So what I did in the portfolio, current position size is about 84,000. I did roll my 13 puts up to the 14 area to collect $1,000. So that's what I would do. I'd go to the options chain. I'd go out to next month, July 18th, and I would go ahead and sell the 29 delta or the 14 strike put option. That's going to make you 51 bucks, right? Divided by 14. And that's about a 3.6% return. So still massive returns there, monthly returns, mind you, 43% a year. Okay, and basically the collateral needed would be 1,400 bucks. So this stock is really popular for smaller accounts or, even larger accounts, and just having that, these high returns in a very safe stock that has a PE ratio of, let's just take a look at where it's at today. It's at 35, okay? So it's trading slightly, the PE ratio is trading slightly higher than the S&P 500 average, but the stock is a very safe stock that has a lot of growth potential. So SoFi is going to be another position that I will potentially scale up maybe tomorrow or on Friday this week. We'll just kind of roll up to the 14s and then maybe sell a few more to get this position up to 100K in the portfolio. Okay, but that's going to be the second stock. Let's move on to the third stock. Now, this stock I'm most excited about because it's one of those stocks that it's always going to be a blue chip in the portfolio. It's not too volatile. The premiums are decent right now, about 2% on a 30 delta cash secured put. But, it's going under a lot of kind of negative news. There's a lot of, is President Trump going to enact those 25% taxation on Apple? Probably not, but he said it. So the market's pricing it in, right? There's nothing really exciting coming out of Apple right now, but just wait until the next cycle, with their AI built into the iPhone comes out, right? There's going to be a lot of exciting news, especially since they partnered up with ChatGPT. So I really like Apple right here. Huge discount from all-time highs, okay, up at 260, which is insane. You're getting a 23% discount still. So this thing has a long ways to go upwards, and that's why I'm getting very aggressive on cash secured puts. So what I did was I actually sold a cash secured put that was right above this lower Bollinger Band, okay? And I'm gonna show you what I did today. So what I did on the Apple position, I upped it. So we have, basically my whole position is 109,000, but I sold a 195 put, okay, to collect 425 bucks. So we're gonna go to the options chain and we're gonna go out to July 18th. And I just went right, pretty much at the money, right? 195. Right now you'd get a better entry than me, but let's calculate the return on that. So that's a 38 delta, very aggressive, but you're collecting 505 bucks divided by 195. Okay, that's a 2.5% return in 37 days on Apple, which is very high for Apple. Usually, like when market's making all-time highs, Apple is making all-time highs, the premiums in here is going to be like 1.2%. But right now we're seeing high premiums on Apple, so this is a wonderful time to take advantage, because if this thing does come down there by expiration and I get assigned, right? Let's just say I get assigned here, okay? I'm going to be riding those shares up, to the 220s, to the 230s, and then maybe even get called away somewhere in the 230 to 240 area. But that's a massive gain on my money. So that's why I love Apple right here. You're going to see once this thing gets kind of bullish again, the momentum just seems to keep going, okay? And we've seen this. We've seen this happen last year. Just kind of this bearish momentum here, and then, just kind of evens out, gets really cheap, and that's kind of where we're at now. And then this thing just gaps up and goes way higher. So, Apple is really one of those that can really just gap up again. And this thing went like up 36% in a couple months. So that's what I think is headed for Apple at this moment. We could have some more turbulent headwinds in the next couple weeks, but once the news is behind it and investors kind of say, hey, this stock is a little too cheap. This stock's going much higher. So you have to be careful with the stocks that you're getting into nowadays, especially with selling cash secured puts. Find the discounted stocks. The discounted stocks are really going to be the Mag 7, but Apple's going to be my favorite. HIMS is going to be my ultimate favorite because it has the highest premiums, and then SoFi is going to be right there in the middle. So if you enjoyed this video, please give it a thumbs up. That helps boost this video in the algorithm. I appreciate you being here, and I'll see you in the next one on Friday. Take care.